Well, hello everybody, this is Price Headley. Welcome back again for another Big Trends Weekly Video Market Outlook. It is Tuesday morning, August the 18th. Very interesting market yesterday with the gap down, and wanted to see how that played out before we did a follow-up for you here. And you can see that looking at the daily chart of the Dow Diamonds, the DIA, it's crunch time here for the markets because one of my favorite indicators, percent R, the way I like to use it, the Big Trends way, is giving us a bull retest off of the low from Monday. So the shot down early Monday that basically held by the end of the day showed a low of $91.40. That's going to be a critical low. And you say, but wait a minute, Price, you've got the MACD starting to roll over. And I would say this is a classic case where usually, we don't even look at MACD, but I wanted to point out how MACD can fake you out. If you're looking for the cross unders, you can see, look at the cross under since the March bottom. We had the first cross under happening back here in mid-April, another cross under back in mid-June, and so you can see those two were fake outs, and the market rallied up. This next cross under as we moved into later June basically was a mildly favorable signal, but by the time it reversed, you could see you wouldn't have made that much if you were just following cross unders and cross back overs. However, one thing that's very notable here that I've always keyed on is the zero line. If you look at the zero line and look at where we've been through most of this run in the market from the March lows, we've been above zero on MACD since late March, and so that's looking at the green signal line, we call it, that basically has been above that zero level. So every time you get a cross under, but it's still positive above zero, that's something in which you could say, okay, that should not be taken as a sell signal, and in fact, to me, sets up another low risk retest when you look at percent R. As we look at, you recall last week I mentioned I was expecting this pullback in the markets that we saw yesterday because VIX was just too low. Even as the markets have been rallying, VIX had not been dropping anymore, and I projected that we could get a pop up towards the 28 level. Why? Because my upper acceleration band here was sitting right at 28 most of last week. So that was my upper target. Well, look at what it hit on Monday, August 17th. It hit as high as 28.39, closed just under that. At 27.89. So bottom line is we've now seen that short-term fear spike. This would suggest, along with percent R testing right back to the midpoint 50 level, which I teach about in my percent R DVDs, that basically we should see another settling in volatility after maybe a little choppiness today and tomorrow. This probably should be a pretty decent little buying opportunity to buy the dip because people are getting too fearful. Remember, VIX spikes up when people are rushing usually to buy put options, which is a sign of fear, compared to when the VIX is hitting the lower bands is a sign of a lack of fear, like we saw back in late July. So bottom line is the market's done its job to create more fear, and that is a healthy thing within this overall evolving short-term bullish trend. So we like that. Also notice the MACD is staying below zero. That's a sign that VIX is still in a overall downtrend, which is another factor that plays to, even with short-term bounces like you saw yesterday in VIX, probably an opportunity to see it settle back down. Quick look to wrap up at the S&P 500 SPY, also giving a bull retest on Monday's action. You can see that that's a pretty similar chart to the Dow, so that makes this low from Monday a very key low to watch at 98.11. So that's got to hold on a closing basis to stay with the bull trend. And the Qs, the NASDAQ 100, yet again, all three of them are aligning the same way. You can see Qs have been showing a weaker MACD for the last 2 or 3 weeks, but the bottom line is it's still a positive MACD. So that's why don't get faked out by MACD looking like it's rolling over. If it's staying above zero, that's a sign that you should stay more aligned towards the bullish case than the bearish case. And if anything, just not be getting faked out. If we get violations of our retest level, in this case for the Qs, the low was yesterday 39.28. The bottom line is that's the key level, but bottom line is that if you get a violation of that, you're done, but you're then just back into a trading range if that happens. So I like to buy the dip. People always ask me, well, how do you know that it's going to hold? And I say, I don't, but my goal is to get a low risk entry point, buying a dip within a that bull trend is a good thing if you can define your risk very tightly, as you can see this indicator allows us to do, and then all other indicators suggest that yes, we're right back around the 20-day or just under the 20-day moving average. We saw that also back in mid-May, and so the bottom line is that too was a pretty good buying opportunity for another snap back towards the upper bands. So now the upper bands are probably going to be our target over the next month or so. Right now they're sitting about 40.8 on the Qs, but rising, so that target can adjust upward a little bit in the coming weeks. So stay flexible, watch for your low risk entry points, see how the market holds over the next 1 or 2 sessions, and expect that there's a pretty good opportunity to buy the dip thanks to the VIX spike up that we projected last week to 28. As we go back, one last look at VIX should show us that the lower band is actually 22, upper band just around 27.8. So we've hit that fear spike. That suggests it's a time to buy, and so we'll be looking for call buying opportunities as well as put credit spreads into this short-term dip here to take advantage of a likely short-term low in the markets. Have a great trading week, everybody. Regardless of what happens in the markets, always keep your risk manageable, defined, and look for low-risk entries with much higher reward potentials. And we'll look forward to seeing you back again next week. Trade well.